Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Friday, June the 25th, 2010. Let's have a look at the charts. Today, everybody and their mother's uncle is going to be looking at the market charts, wanting to know what's going to happen next. Are we going to bounce on Monday? Are we going to go lower? That's going to be a tough call for them to make, and I'll show you why. Typically, you want to find situations that are very volatile. A very big move lower than a oversold condition makes it a good, easy point to say we're going to get a bounce. Even if it's not a reversal, you'll still get the bounce, and therefore bulls can bet on that and make a little money on the upside. That's what they had here. In this particular case, what we have as of Friday, you had a move, wrong tool. You had a move to the upside here and then a small move here. Well, that's a lot harder to play because it's not really overextended in either direction. So if she bounces to the upside, it's possible. If she goes lower, that's possible. So it's really tough for those guys to call that. Day traders going to have a heck of a time doing that. Um, we're not day trading here, so we don't have to worry about it. Let's look at some of the main indicators we have here, and you can go back and watch previous videos on our website or on YouTube. We have given many reasons to be bearish here, fundamental as well as technical. But all in all, I want to stay a bear here, and any move to the upside, I would of course short. A lot of guys are watching this head and shoulders pattern set up right here. You've got this shoulder set up, and you've got this head, and then you're setting up this shoulder. A lot of guys, myself included, were expecting a bit more of a bump to the upside for that shoulder than we got. It didn't really go that high. And then she rolled over. Now she doesn't have to do anything else. She could actually, from here, just keep going lower, break that neckline, and then we'll have a major sell-off. That sell-off can actually, you can get a target for that based on the head and shoulders pattern. Is you can just take the price from this level here, the price from this level here, this low point here, and do the math on that. And you get about 1,350 points. So this move here, this entire size of the head, will actually be duplicated down here when it breaks down. So your target would be 1,350 points lower than this neckline when it gets broken. So that's a big move lower. And if you've watched our previous videos, we're calling for the Dow Jones to fall another 2,123 points, and we show you why on that video. I'm not going to go into it again here, but the main thing is when you're in a situation like this where the market's looking like it could go in either direction, and it's really tough to call, revert back to your previous call. All right, that's always the safest way to do that. You'll notice here we're neither overbought nor oversold. She could find support here and bounce back up, but she doesn't have very far to go before she hits that overbought line again. We'd be shorting that again. At the same time, next week, all this data right here, we jumped up here and we told you this bounce was going to happen before it happened. Then she bounced up here. We told you the sell signals were not good signs for strength. And at the same time, any move to the upside was going to get hampered by all the bearish news that was going to be flowing out all week long. Next week's the same thing. Going into, I think it's July 2nd, we've got the unemployment report. That's not going to be good in any way, shape, or form. Lots of bearish news still coming out, and the austerity measures in Europe are also going to be a problem for the U.S. because we're also going to have to enact austerity measures here. Let me explain that. If you remember back in '08 where the government came out and said, all right, every bank's getting TARP. Well, they wanted every bank to get TARP because they didn't want anybody to know which companies sucked. Well, like we can't read the financials, but in any event, once they all had it, then it was a race to pay it back. They all want to look like they were stronger than the next guy. Nobody wanted to be left holding the bag. The one guy sitting out there still holding on to TARP, right? The same thing will happen with your countries when Germany enacts their austerity measures and England and all these different countries coming together. They start doing this. They start improving their uh, balance sheets. And if the U.S. does nothing, we're going to be the guys standing out in the cold looking like a bad investment. So everyone's going to leave us and go to them. So they're not going to let that happen. That's why the U.S. is so upset with the austerity measures being put into play over there. Yes, it's going to crimp the recovery, but it's also going to force the U.S. to do their own austerity measures. So this is actually just getting started. It's going to be awesome. One other item to note, another way to spot that this is not the end. We've talked about this before. I'm going to show it to you on the S&P as well today. You'll notice here when we had this uptrend moving along, we started getting pierced right there for sure. And I told you guys back then when this happened, when you start getting piercing signs, that's preemptive of a breakdown that's coming. And sure enough, that's exactly what happened. Here, let me get the right tools. All right. How about that? Yes, awesome. Let's just use this. Wrong tool. All right, so here we had this low point. Dun, 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 right here. And you'll notice we pierced it, and we're bouncing still above it, still playing above it. This is preemptive warning sign to you. This is going to break down. You will fall below here and close well below here. So keep an eye on that. This is just a fake little bounce to the upside based on the fact that we'd sold off so much so fast, but the end result will be much, much lower. You see the same thing on the S&P. You know our low point here on the S&P, the 6-month chart. Each one is kind of is one day. Your low point of 10,044 right here. It's already been pierced here and maybe not there. Yes, right here as well. Another 44, 10, 42. Yeah. Okay. So you've already been pierced. It's preemptive warning that you're going to break through it. So I'm going to stay on the short side and then bounce to the upside, which you could get bounced. I don't mind that. Anytime we get overbought on these slow stocks, I'm going to go ahead and add to that short position. Very simple. Okay. Awesome. One more item to consider here when wondering if we're, hitting an actual bottom. We told you when we went into this mess that it was because of Europe. And if you look at the FTSE, you can see they have broke down that uptrend. Here's their old uptrend that we, bouncing along, and then today they broke right through that. And no bullish candlestick formation at all. This is a continuation signal and a very, very bad sign here. You've also got 1, 2, 3, 4, 5, 6, 7, 8, 9 days to make this move from here to here, and 4 days to erase the entire thing. Strength is still very strong in favor of bears. You want to be a seller, not a buyer in this market. You'll also notice you're nowhere near oversold. So stay short. That's pretty simple. Yeah, awesome. If you've not been to our free website at perfectstockalert.com, it's 100% free. All we ask in return is you refer a friend. It's that simple. And it's really free. It's not like that internet stuff where it's like, give us your credit card. No, none of that stuff, man. It's free. Right. Also, subscribe to our YouTube channel. We need that support to stay free, and we'd appreciate that exponentially. Thank you very much. God bless. Enjoy your weekend. Get out of here, man. Don't be sitting here wasting your weekend watching these videos. Hey, hang on a minute. Look at this disclaimer. The disclaimer. Yeah, now you can get out of here. Later. See you Monday.